Welcome to World Insight. Please subscribe and hit the bell icon for more breaking updates. The North American trade truce is over. On June 4, 2025, the Trump administration doubled tariffs on Canadian steel and aluminum to 50%. This move marks a dramatic escalation, directly challenging one of America's oldest allies. The decision has thrown the deeply integrated US-Canada economies into turmoil. The North American supply chain is now under immense strain. Earlier in 2025, the administration had already reintroduced a 25% tariff on all global steel and aluminum imports, expanding the controversial Section 232 tariffs. For Canada, the pain deepened in April with a 25% tariff on all vehicles manufactured outside the US, a move Unifor says violates the CUSMA trade agreement. The Trump administration's justification, linking tariffs to border security and the fentanyl crisis, has been met with skepticism in Canada. Canada supplies half of all US aluminum and a quarter of its steel, underscoring the deep codependence of both nations' industries. The tariff hike is a self-inflicted wound for many American businesses. Ottawa's response has been measured but firm. Prime Minister Mark Carney is holding off on immediate retaliation, focusing on intensive talks with US officials to de-escalate, but pressure is mounting from industry groups and labor unions demanding swift action. Canadian jobs and economic stability are at stake. The stage is set for a high-stakes confrontation that could redefine the US-Canada relationship. The next moves will test the limits of diplomacy and economic endurance. The economic fallout from these tariffs is immediate and severe. For American industries, the 50% levy on Canadian metals means higher costs across the board. US steel prices could surge over 8%, aluminum by nearly 6%. Sectors like automotive, construction, and manufacturing will bear the brunt, threatening growth and fueling inflation. While US steelmaking supports 80,000 jobs, steel-using industries employ 12 million, highlighting the risky logic of these tariffs. The 2018 tariffs cost 75,000 jobs in steel-dependent sectors. The new tariffs could do even more damage. Major US infrastructure projects, from the Bipartisan Infrastructure Law to the CHIPS Act, now face higher costs and possible delays. Even private ventures like the $500 billion Stargate AI data center are threatened by rising material prices. The tariffs undermine the very industrial policy goals they claim to support. In Canada, the pain is just as acute. The tariffs strike at the heart of Canada's metals and manufacturing sectors. Quebec, a major aluminum hub, is especially vulnerable. Disrupted supply chains threaten the viability of auto plants on both sides of the border. The economic destinies of the US and Canada are so intertwined that a blow to one injures the other. Industry leaders warn of lost investment, job cuts, and instability. The ripple effects are being felt in every corner of North America. With the US market turning hostile, Canada is pivoting fast. Ottawa is accelerating efforts to diversify trade, targeting the EU and Asia for new deals. Canadian negotiators are marketing their low-carbon aluminum as a reliable, green alternative. The EU, with its environmental standards, is a natural partner. Securing a major deal would send a clear message to Washington. Canada has options. In Asia, booming infrastructure projects create huge demand for metals. By forging new links, Canada reduces its vulnerability and builds resilience. Instead of isolating Canada, US tariffs are pushing it into the arms of America's economic rivals. Beneath the North American trade fight lies a bigger problem: China's overcapacity. China produces over half the world's steel, flooding markets with cheap, subsidized metals. This distorts global prices, making it nearly impossible for US and Canadian producers to compete. Ironically, direct Chinese steel imports to the US are minimal due to existing barriers. The real issue is how Chinese overproduction depresses global prices, hurting North American industries. Targeting Canada does little to address this core problem. Trade experts argue that punishing allies only weakens the coalition needed to confront China. A multilateral approach is the only way to pressure Beijing to reform. The current US strategy creates division and mistrust among allies. Instead of uniting against China, the US is alienating its closest partners. The real adversary is being ignored while allies bear the brunt. It's friendly fire in a global economic conflict. Canada faces a tough choice: retaliate or seek a diplomatic solution. Industry and labor leaders are demanding immediate countermeasures, including a 50% mirror tariff on US metals. Ottawa is also considering stricter import controls to block dumped foreign steel and aluminum. Industry Minister Melanie Joly signals readiness to defend Canadian producers. Diplomacy remains central. Prime Minister Carney is in intensive talks with Washington seeking an off-ramp. Canada's upcoming G7 presidency is a chance to build a global coalition against China's non-market practices. By framing the issue multilaterally, Canada hopes to isolate the U.S. position. Unifor has proposed a temporary halt to all strategic metal exports to the U.S., a dramatic escalation. They also call for stronger laws to prevent U.S. pressure on Canadian companies. The sentiment is clear. Canada won't be a passive victim. The government must balance retaliation with the risk of a full-blown trade war. The next steps will shape Canada's economic sovereignty. The world is watching. On the ground, the impact is personal and profound. Lana Payne of Unifor warns the tariffs are killing investment and threatening families. Industry leaders demand a firm government response to prevent plant closures and job losses. Quebec's aluminum workers, among the greenest in the world, feel betrayed by a policy that punishes sustainable production. In the U.S., most businesses see the tariffs as a costly mistake. With 12 million jobs in steel-using industries at risk, the economic calculus is stark. The consensus: these tariffs do more harm than good. Both sides of the border are united in frustration and fear for the future. North American trade stands at a crossroads. The next months will decide if the U.S. and Canada rebuild their partnership or spiral into a destructive trade war. A solution may lie in reviving multilateral efforts like the Global Arrangement on Sustainable Steel and Aluminum. Expanding this to include Canada could unite allies against carbon-intensive, subsidized steel from China. Canada's G7 leadership is a chance to champion this approach. If the current trajectory continues, both nations face escalating tariffs, disrupted supply chains, and lasting political damage. The trust built over decades is at risk. The integrated North American economy could become a casualty of short-sighted protectionism. The choice is clear: work together for a resilient future, or dig economic trenches while rivals benefit. The world is waiting to see which path they choose.